All right, Ken Orange Theory Trader back with you with another lazy trader method, just showing you small accounts, big risk, not big risk necessarily, but big reward account flipping trades, how they need to look on daily ranges. Okay, so this is just a trade from the week of November 19th, or let's see, actually the week of November 17th, 2025. And I'm just showing you how these look. So I did not, if I did take this trade, I forgot about it. I don't know, but I just found one because I wanted to find one in order to show you guys how you can grow your account exponentially and what you need to do. So it's less about the trade and more about risk management. I always start with a real basic account a balance. So in this case, first off, we need to understand our margin and leverage. I wanted to put all the pieces together so you see how this looks. So let's just say first off, for our margin, assuming we have a broker that offers us the leverage of at least 1 to 500 to take a dollar per pip position on a pair ending in JPY, we need a pair, or we need at least $21. Okay, if you had a $21 account, you could at least take full margin, of course. You can get a dollar per pip out of that. Now let's just say hypothetically that we have an account balance of 150 bucks and I have a 21 and we put a 21 there knowing that that gets us a dollar pip. That means that realistically we could take about six, this rounds up, but let's just say about six entries on this pair for JPY, not completely blow our account by using all the margin and having a big retracement, hypothetically speaking. But you know what? For the sake of safety, I'm going to say five. We're going to try to aim for 5 entries on this, and let's see what that may get us on this pair. Okay, so remember, we're scaling in. If you're trading this type of model, you really only need to trade like once a day. I mean, I'm sorry, not once a day, but well, yeah, once a day, and also like once a week is what I'd recommend. Okay, but this is Friday. Okay, this is a basic short candle range theory pattern. The daily does hit the daily chart does make the high of the week for the money candle, which was on Thursday. So Friday, we're looking for that straight drop. So now we go down to the 5 minute chart. And typically when we're trading the daily chart, our entries should be early in the day, like maybe around 8 or 9 o'clock. Sometimes as early as 6:30. So let's take a look and see what the time would be. And then we'll also see what the risk to reward may have been and see what our best entries would have been. So if we go to the daily open, which was right here. Okay, this is Thursday going into Friday. This is the high of the day right here at 725. So this by then the spread will have calmed down. So we're clear to trade. And let's see, best entry, let's just say would have been off this first, let's say this first fair value gap. So we'll just say this is entry one right here. This was at 925. So that'll be our first entry right there. Okay, this fair value gap is holding. So on a little bit of a retrace, let's just say, and I'm sorry for the risk, can't forget that part. It's right. We could have probably got away with a 10 pip stop loss. Yeah. So you're risking $10 on that. Right. And let's see, we'll set our take profit to the bottom of the range. So that's, we'll say 80 pips. All right. So there we go. So just for that first entry. Okay. And obviously hindsight's 2020. We see it did hit and went beyond it a little bit, but for now we're going to do the bottom of the range. Okay. And then let's just say we just use our fair value gaps just to keep it simple. So what would you say? 5 entries. So every time we see a fair value gap and it holds, we're going to try to just get in. So fair value gap was created right here. We'll take that entry right here. That's 2. Let's say we add another one right here on this retrace. That's 3. This gap holds. We'll just say right here around 4. And then you add one more right here. Okay, 5 entries. Okay. There you go. So that's how it would look, just using the fair value gaps as a guide, and they hold and just give some structure to the whole deal. All right. So we already have an account balance. I'm going to bring up my calculator here. And we already have an account balance of 150. We're at a dollar per pip. So let's see what each of our positions would have netted us. So obviously this one would have been 80 bucks. The next one would have got us, we'll say 70 bucks. The next one, Number 3 would have got us about, we'll say, $67. The next one, this is 1, 2, 3. That's about, we'll say 64 and 60 respectively. Let's see, that's 1, 2, 3, 4, 5 entries. All right. Okay, so we went from 150 to 491. Okay, so that's a $491 ending account balance. So we want to look at the risk to reward, or at least our return on investment. So the ROI on that account would have been 227%. Okay, now, once again, are you going to get 200% every day? No, you're not. Okay, are you going to get it every week? No, you're not. Okay, let me just not set false expectations. This is just a one trade example of the candle range theory on a daily chart, showing you how you could have scaled into a position and made a decent return on your money. Okay, this is the daily chart zoomed out. These are all the entries. Anybody who went long this day got smoked. Okay, but this is the only type of behavior that we're looking for. So what I strongly recommend, if you want to do this type of account trading or this type of CRT trading, stick to the daily chart. Get your entries in early, okay? Because remember, we expect this candle to straight drop for the majority of the day. So that means around Eastern Standard Time, between like 7, 9, 10, the first part of the candle, because this is how it should look when it's finished. All right. So that's that. Hope you got something out of it. It doesn't take a lot to get a decent return, but again, you're not going to get 200% every day. Don't bother trying. Okay. So I'd say at the most, you can get one of these trades like twice a week, but you're not going to get them every day. You're just not. I promise you're not. Okay. So just please take my word for that. Okay. All right. So I really don't want to set false expectations. I don't want you putting your rent money on this. I don't want you to put your mortgage in your account thinking you're going to make triple your money. Folks, it just doesn't work like that. Okay. This is not for the greedy. This is for the discipline. Because remember, I started with a risk of $10 and just went up from there as the trade went into my favor. So I train my brain not only on what I'm risking, but also what I'm looking for. And then when the pair does something that I don't like, or when it starts to take out some of these fair value gaps, okay, because remember, we'll do this and then we'll end it. Let's take a look at how this actually played out, because remember, the replay option is golden. Look at how these gaps formed and held. Okay, forms and holds. Okay, some of the gaps got taken out, but you need to have that point of no return to know, okay, if price hits this level, I'm going to get out. Okay, but obviously it just kept dropping and went into our favor. So, but again, you got to be disciplined in that. If you can't be disciplined, this really isn't for you. You got to sit through all these retraces and just wait, and then boom, it did hit the exit at about 10 o'clock. Typically on these daily range trades, you're out at by around 10 o'clock for the New York session. Typically price retraces in New York. All right, so, but I appreciate you watching. Thanks for your time and attention. Have a great rest of your day. Take care.